Hello, Market Club members everywhere. Well, we may have our first chink in the armor here. We had a daily red trade triangle, 2040 and 57. That's where we said the market potentially could be going down. This is the key level to look at. Look at the PSAR. That's the parabolic, and that's at 2030.45. If we see that level hit, it's possible today, but maybe tomorrow, but we could see more of a pullback, certainly if we put our Fibonacci numbers on there, which we like so much. We'll go from the highs down to the lows right here. And you can see somewhere around maybe 1932 is a 50%, and 1900 even, close to it, is a 61.8% pullback. Certainly we're very overbought. You can see that on the RSI. So I would not be surprised to see this market come under more pressure. We are lower for the week. That's important to remember. How we close this week is going to be very, very important before the Easter holiday. Let's move on. The Dow hasn't quite gotten to our levels yet, but certainly if we see the market move below 17,481, which is not that far away, about 50 points away, it will in fact create a signal that we could be under pressure. Also, the PSAR, which is at 17,392, is going to be very, very carefully watched today, and I think that's something we should all pay attention to. The market, as you know, has had a very strong move up in about from the middle of February all the way up to the highs here. And if we scope this out even further, I think that's the important thing to look at. Maybe a 6-month chart or even a 1-year chart. You can see there's a lot of resistance. So if we turn down from here, we'll be making for a period of quite some time, actually 1 to 3 months, which is definitely in the cards in this case. So let's see how that plays out. Looking at the Nasdaq, which did have that 61.8% pullback as Fibonacci retracement, as we pointed out yesterday, we want to watch the level today. We're watching very closely is 4,772. If it goes at those levels or lower, then I think we'll see more of a pullback. Again, the market is lower for the week, and that's an important element. So let's see how this plays out for the rest of the day, but certainly the parabolic comes in at 4,700 or 4,700, very key level for this market. So let's be very, very alert to some changes, because we could see it pull back quite easily, I think, back to the 4,500 level, even the 4,400 level. So let's move on. We have a signal today to exit on crude oil at 40.41. We're currently at 40.11. That was a 3-day low. Remember we talked about this Fibonacci, remember we talked about this divergence, this negative divergence in the RSI and how important that was. So if we look at that RSI, you can see that prices were going higher, like right here, but reality, the momentum was going, lower, which is that's a divergence. When you see prices going higher and it's not followed by momentum, that's not a good sign. So here's our first signal to exit. You can see it right here. We moved into a 55 score, which is a trading range, and I could see this market getting back down to 38. And remember, the parabolic at this point in time, if we close this up, but the parabolic comes in at 38.49. So it's not that far away. It's particularly as volatile as oil has become in the last several weeks. So let's see how that plays out. But generally speaking, we are still longer term. I think this market has made a bottom. This is a very important double bottom. The pivot point, we talked about that months ago. And the target zone, pretty much we've gotten there to our satisfaction. So let's see how the rest of it works out for us. Now let's take a look at gold, because gold's really been under a lot of pressure today. And the good news is on gold, if there is good news, we actually exited gold on the 21st. You can see here our daily trade triangle. Remember, we used the weekly, which is still positive, and the daily for timing. So we're out of this market. We got at 1247. The market's actually about $26 lower. Very happy about that. And of course, it's gone below the 50 line on the RSI. Not a good sign, and I think that's something to be concerned about. The other thing you may want to look at also, which is the RSI, and that's a negative divergence. See how this market's going down like this, and how prices were actually going up. So that's something to be concerned about. This is a great indicator for divergences and seeing where tops are being formed and when bottoms are being formed. But again, I think what you want to look at now, we are looking at the April, May period as possibly being a low period. So if we go back, let me show you what I mean by that. So if you go back, scope this out, we'll go back just a couple of years, maybe 1 year, and let's just take everything off the screen, make it very, very simple. Take all the trade triangles off, take the parabolic off, right? It's so easy to do with MarketClub. So you can see, scope this out just a little bit further. If you look at where these lows come in, and I think it's pretty interesting where they come in. You have a low here. We're going to see a low sometime, I think, in the April, May period, which will take some time over here. So let's see how that plays out. But generally speaking, you can see how this market has sort of had this rhythm of making a low, going up, coming down, making a low, going up, coming down, making a low, going up, coming down, and so on and so forth. So I think that's the pattern we're going to see. So I want to watch in the April period for a low, but I'm going to use our trade triangles to tell us exactly when that low is coming in. The trade triangles, of course, are very helpful, and you want to look at the weekly and the daily. Weekly is where we get our trend from, but we also have the monthly, which is positive this time, but the daily is where we get our timing from. So let's see how that works out. Again, the daily really helped us out 2 days ago. We got out before this big drop, and we're very happy about that. Plus, we're below the 50 line on the RSI, which is not a good sign. Hey, I'm Adam Hewison. Thanks for watching, and every success in the markets. I think we could see some turns coming in here, so be careful, be nimble, and always be diligent. Thanks for watching today.